Good day and welcome to the Daily Decision Service. Let's get started today by introducing you to the manager of the Daily Decision Service itself. So allow me to introduce myself. My name is David Moenning. I'm the founder and chief investment strategist at stateofthemarkets.com. I'm the lead manager of the Daily Decision Service. I've been a professional money manager since 1987. I'm the proprietor of Heritage Capital Management, which is a Chicago-based money management firm we founded in 1989. But I'm not a journalist, I do not have a TV show, and I'm definitely not a media star. No, my focus is on managing the risk of the stock market. Speaking of risk, the problem is the last 13 years has taught investors that bear markets definitely happen, that a long-only approach to investing is not enough anymore, that buy and hope has failed miserably, that mutual funds definitely do not manage risk for you, and that modern portfolio theory has basically been debunked. From 1982 through 2000, the game of the stock market was relatively easy. Bear markets were short and sweet, and the recoveries from the bear markets were very quick. But since 2000, it's been a completely different ballgame. You see, there's been two brutal bear markets during the last 13 years. First, there was the tech bubble bear of 2000 through 2003, where the S&P lost 40.1%. Then more recently, we had the credit crisis bear in 2008, where that year alone the S&P dropped 38.5%. The end result was what most analysts call the lost decade of investing. You see, since the turn of the century, through, it's 11/25/2012, the S&P 500 is still down 2.4%. How can this be, you ask? Well, remember that the mathematics of loss are simply brutal. A 25% loss means that your portfolio needs a 33% gain to get back to break even. A 33% loss means you need 50% to get back to break even. And a 50% loss means that your portfolio is going to need to double in order to return to that break-even point. This is why we agree with Warren Buffett's two rules for successful investing. Rule number 1, don't ever lose big money. And rule number 2, never ever forget rule number 1. The bottom line here is sometimes the best offense is a good defense. And we believe all investors should have at least a portion of their investments in risk-managed strategies. This led us to bring the Daily Decision Service to the general public in 2009. You see, we believe there are definitely times to be aggressively invested in the stock market, there's times to be standing on the sidelines, and there's also times to be short the stock market. So, let's get to the Daily Decision Service itself. What is this Daily Decision Service? Well, it's an active risk management service designed to help keep you on the right side of the market's important trends. You see, we want to be in the market during big moves up. We want to reduce risk during big moves down. The Daily Decision, you can think of it as your first read or your first decision of the day. It utilizes easy-to-use ETFs. It holds just one position at a time and only requires about 5 minutes a day. And yes, investing can be this simple. Let's look at the goals or objectives for the Daily Decision Service. Number 1, we want to make investing in the stock market easier. We want to provide guidance and protection for our subscribers. We want to avoid big losses during bear market declines, and we want to maximize gains in bull markets. But the primary goal is to get the big moves in the stock market right. You see, each year there are 3 or 4 key trends that really make the year. Our goal is to get the majority of these trends right. For example, let's take a look at 2009. Here's a picture of 2009. The red on the chart shows you when the Daily Decision told us to be out or short the market, and the green on the chart shows you when we were actually long the stock market. So as you can see, at the beginning of 2009, the S&P 500 started off on the downside. It actually lost 25% during this period. While we were not out of the market during the entire period, you can see that we did get the majority of this decline right. In other words, we were on the sidelines for the majority of the move. Then, while we did not get the absolute bottom, we did get in pretty quickly and captured the majority of the up move. We then captured the majority of the summer rally and finally the majority of the year-end rally. And I think this is a pretty good indication of what you can expect to receive from the Daily Decision Service. Again, the Daily Decision focuses on the big moves in the market. We don't chase every shiny object. We don't watch fast money. We don't make day trades. There's no options, and we don't dream up complicated strategies. We make just one decision once a day. Remember, the overriding goal is to keep our subscribers on the right side of the market's important moves. But it's very important to recognize that we will not, absolutely not, be in the market every up day or short or out of the market on every down day. Remember, we are money managers and not magicians. Let's look at what subscribers receive with the Daily Decision service. First of all, the most important part of the service are the trade alerts. We send a trade alert via email or text before we ever make a move. You'll also get the Daily Decision morning report before the opening bell. We'll tell you the decision for the day. We'll review our current positions. We'll take a look at the market. We'll look at our new member ratings in case you're not in the current trade. We'll look at our model readings, the recent moves, and finally we'll update performance. And yes, we update performance each and every day. You'll also get my State of the Markets report, which I've been writing for more than a decade now, which focuses on the drivers of the stock market. And finally, you'll get 24/7 access to the Daily Decision Service homepage, which again gives you the current positions, new member ratings, the performance of the programs, daily trading histories, the new user guide, and the model portfolio explanations. Speaking of those model portfolios, there are 3 daily decision strategies to choose from. First of all, there's the main model, which is designed for conservative growth investors looking to manage risk and stay on the right side of the important moves. Then there's the aggressive model, designed for more aggressive growth-oriented investors who can handle the volatility of a more aggressive approach. And finally, there's my personal favorite, the hybrid, which is an in-between approach designed for growth-oriented investors. All 3 strategies are included in the service so that subscribers can pick out the proper risk tolerance that is appropriate for them. Let's talk about how we make the decision. We've developed a disciplined, unemotional risk management system that is able to adapt to changing market environments. While no system is perfect, and let me repeat that, no system for managing the stock market is perfect, but history shows that implementing a disciplined, adaptable system will help us get most market environment right and help us avoid making big portfolio killing mistakes. At the heart of the Daily Decision system is our unemotional, disciplined market environment model. The model incorporates literally hundreds of component models and indicators designed to tell us when the risk factors for the market are high, low, or uncertain. In sum, the model tells us whether the current environment favors the bulls, the bears, or neither team. But you can think of it as a stoplight to guide your portfolio. When the market environment model gives us a green light, it indicates that the odds favor the bulls and that we should be long the stock market. When it's yellow, it tells us that the environment is uncertain, or what I call iffy, and we should take a different approach. And then when the environment model gives us a red light, it tells us that the risk of a decline is quite high and that the odds favor the bears. Okay, enough of all this chit-chat. Let's talk about the performance of the system. Here are the results of the Daily Decision service since we started issuing signals back in 2009. On this chart, you can see we've got the main model, the hybrid model, the aggressive model, as well as the S&P 500. In 2009, the S&P 500 gained 23.5%, whereas all 3 models outperformed rather handsomely. In 2010, the S&P gained 12.8%, and once again, all 3 of the Daily Decision systems outperformed by a significant amount. In 2011, the system stumbled a bit as the market was driven almost hourly by the news out of Europe, but in 2012 we're back on track and making money again. I think the key here is that the main model, over the less than 4-year period, has doubled in value, up 105%. The hybrid model is up 302%, and the aggressive model is up 256.4%, all against the S&P 500, which is up 56%. These are pretty good numbers. The main model doubled in less than 4 years. The aggressive model beat the S&P 4.5 to 1, and the hybrid model beat the S&P by nearly 6 to 1, again in less than 4 years. So what's not to like, right? But you have to understand, nothing is easy in this business, and this system is no different. It's hard to stay with a mechanical system at times. The key, though, is to understand the strengths and weaknesses of the approach you're using. We will not, repeat not, get the tops or the bottoms of moves. Gains happen suddenly in the stock market and without warning. Remember, you never know which move is going to be the move for the year. It's also important to recognize we do not have a crystal ball that can predict news events. We will make bad trades, several in a row at times. We will look stupid at times, especially when the market is range-bound or the trend is changing, but we will also get the big moves right. The key is to stick with the program for a period of 2 to 3 years, and yes, I'm sorry I said years, not weeks or months. So, if you're looking to make investing in the stock market a bit easier, and you want to incorporate a risk management system to help protect you during those ugly bear market periods, then the Daily Decision may just be the ticket. Feel free to subscribe or take a free trial today. Thank you for spending a few minutes with me today to explore the Daily Decision system, and finally, I'd like to wish all of you the very best in your investing endeavors.